Hey everybody, Price Rayner here, Berkshire Hathaway Beach Properties of Florida. What we have for you is a segment of our annual State of the Market. This is our 30A segment of that, where we break down what's happened from a historical perspective from back to the year 2000 through year to date 2020. Breaks down detached single family homes south of 98 all along 30A. Please take a look, and it's right here for you. Is the 30A market and its historical look there. Here, this is actually the mean, not median, and this is taking the mean and taking our average price here and running that out in the far right column. The average days on market column is pretty interesting. I mean, we know that back in 2005, average days on market were 106 days. That's really strong, really strong. And then we see it peak in 2008 with 273 days on market. And then we see a steady decline year over year, pretty much each year thereafter, showing an increasing demand in our market. 2019, average days on market for that year is 150 days. 2020 is 173 days so far. But when I pulled last week the 204 single family homes that are under contract right now in Section 7 and 18, the average days on market is 124 days for those. So, just kind of looking, we have 111 sales here, 204 sales there. If I do a weighted average of those, you're going to be about 140, 145 days on market. So we're seeing continuing strengthening of demand in our market. Go from there to look at the number of sales in the far left column. You'll notice in 2004, there were 622 homes sold at the peak of the market. Backing up from there in the year 2000, had 230 homes sold. Last year, we sold 1,078 homes, 4 times more than we sold in the year 2000. Just hold on, I want to get to that. But it grows and grows. And then you see a steady increase from the bottom, 2006, in the number of sales. We sold 168 homes. After adding, about 1,500 sales the 4 prior years. So 168 homes. So that means back in 2000, this area looked much different than it did today. It was very, it was in its infancy, let's say. Very few homes. So, when you look there and go to 2019, 1,074 homes sold. 2017, 1,013. 2018, 965. That's a significant amount of homes sold in an 18-mile stretch and 4 miles from beach to 98. It's huge amount of sales. Oh, we sold your question. And then when we begin to go and look at this and we go back to the model, the 18-year model, what happens historically is we see 7 years of steady growth. So let's just call that from 2010 to 2017. Then we have, if their chart is true and indicative of what's happening now, which, by the way, when you extrapolate back and you go from, to the 90s to 2007, it follows it almost exactly. Go from there, you enter from 2017 and 18, fourth quarter 2017 to fourth quarter 2019. They describe in there there's a 2-year period they call mid-cycle softening. That's what we see there, where you see pricing begin to slow down. In 2018, the pricing went up 0.36%, not 1%. 2019, on average, pricing backed up almost 5%. So then what happens thereafter, the next 4 years to 5 years of the market, you start to accelerate. That's when we will begin to see if their estimate or historical guess is close to what we will experience. We'll enter what's called the expansive part, of the hyper portion of the cycle, where prices will begin to push up dramatically. And you can see here, we're looking back from 13, where the price changed from 13 through 17, see the average price, 8, 9, 10%, which when you go back and you look at the Hutchison report, which the Hutchison group was an appraisal group out of Fort Walton, that they monitored pricing. They produced what was called the Hutchison report from the late 60s until the early 2000s, which was our Bible here. It said what was happening in real estate. They would tell you beach-oriented property historically along the Panhandle has appreciated between 6 and 8% on average, going all the way back. So that shows us in a point where we happen to be in the 5th fastest growing county in the nation. So I would expect those prices to be a little higher than we were back when it was only the Redneck Riviera and we were dealing with people within an 8-hour drive time. Our market has expanded, the demand for which has expanded exponentially, and therefore we have seen significant growth. But the beauty of that is our average price has not moved up that much. It's just steadily moving up from a low of $678 in 2009 to 2019 of $1,165. It shows 2020 of being $1,035, but those same 204 pending sales I mentioned previously, the average price of those for their contracted number is $1,243. So for 96, 97% of that would be $1,105-ish, and the weighted average of these would put you at about $1,224, $1,225, $1,225, somewhere there. Then when we go and we look at the mean change from 2000 to 2020, if you remember that little blue line on the graph we looked at earlier, is $1,233. So we're just in almost perfect unison with the mean line, which tells me we have a very, very healthy market that is being strengthened by demand on the increase, and the government is totally teeing us up with historically low interest rates, a good and improving economy. We couldn't be in a better situation for the next, notwithstanding, geopolitical things or some goofiness like that, for a, really nice run for the next 3, 4, 5 years, maybe longer, because one could argue the case that we have had a historic correction, one of the almost the same proportion of the Great Depression. So if our correction has been so deep, one could argue that the subsequent rebound would be longer than average, longer than the average. So this will be very interesting to watch and remember some of the clues we'll look for going back to see what is the Fed's position. Does it raise rates? How do those rate increases affect demand, our days on the market? That was some of our clues in the last cycle. When we sat around and we thought a correction might be coming, it was indicative because it became clearer, became that it could be a possibility because days on the market started to go up. You'll see the difference between 2005 and 2006, days on market almost doubled. It's a great sign that people aren't buying. And most people didn't pick up on that. They didn't see that change. We can watch that again. This should continue, days on market continue to go down. When we see, it's not a little move, but when we see a substantial move where stuff's starting to, quote unquote, languish on the market where it didn't. And you may have a listing that's languishing, but if there are other things selling around you because they're priced right, you've just mispriced the property relative to the market. So we can't, don't fool yourself. And so we again are in a great place right now with the 30A market. I couldn't be more excited about what I see. I would just tell you all again, we couldn't be in a better place locally, nationally, specifically locally. You're selling real estate, those are in the 30A market, 5th fastest, maybe even 4th now. One of the fastest growing counties in the US. With infrastructure coming, lifestyle coming, sugar white beaches, emerald water, southern hospitality, stuff you can't buy, intangibles you can't find other places. You won't find this in Naples. You won't find this in Malibu. You won't. For people that desire that, it's a tremendous opportunity for us to help them find their little piece of paradise. Hey, thanks a lot for watching the 30A State of the Market. I hope you got something out of that. Be happy to dive deeper into that with you, to your specific community, your property. Love to do that. Love to come up with a value for you. Talk a little bit about what's happening in the market. Had a big correction in the stock market last week. Just would love to talk to you, help guide you, get to know you. And if I do know you, spend time and talk with you more, give me a call, 850-259-8287. It's Price Rayner. Thanks a lot for watching. Stay in touch. Have more info coming your way throughout the year.